Hello, everyone. My name is Pieter de Ree, Global Tax Director at PwC in Brussels, and I welcome you to the PwC Tax Bite podcast series. In this series of podcasts, we discuss relevant developments in the international tax world with experts in the field. You can follow this podcast on Apple, Spotify, or via the PwC website. Today, we are going to talk about the developments in the area of tax controversy and tax audits. In a previous edition, we already touched on the developments specifically on beneficial ownership, but in this episode, we will take a broader look. And I have with me three very good experts in the field today. First of all, we have Veronique de Brabanter, attorney at PwC Legal and specialized in creative ways to resolve tax disputes and tax litigations. With us also today, Evie Geerts, Director Global Tax at PwC, and Evie is engaged in a lot of the recent withholding tax disputes, focusing on beneficial ownership, but also on tax abuse. And of course, also Bram Markey, Transfer Pricing Director at PwC and leader of the PwC Belgium tax controversy practice. Well, many groups are confronted with tax audits, clearly in Belgium and abroad. So the purpose of this podcast is to look at some of the recent trends, but not all doom and gloom, as we will share some best practices on what you can do to prevent or resolve disputes as well. And to start on this topic, I have a first question for you, Bram. So at the time when businesses are recovering from the pandemic, isn't it strange that especially now we see an uptick in tax audits and disputes?
Well, Peter, it's definitely unpleasant because groups and taxpayers, they are struggling to prioritize already the scarce resources. But actually, it's a trend that started before the pandemic, where we did see an increase in audit activity, more scrutiny, new techniques for auditing. So it's not new, but it's definitely unpleasant because the last thing that you want to have on your plate when you're already struggling and prioritizing is a lengthy tax investigation and a potential dispute. So I'm afraid it's not new, but there are new items that are really apparent when we see how audits are conducted. And the first one, what I really notice is what I call the viral spread of application of anti-abuse legislation in all sorts and forms. It seems that more often genuine tax efficiency is by definition assimilated with tax abuse, and genuine business drivers for certain transactions or structures are completely questioned by the notion of that tax abuse and the intentional element there. So that's definitely a worrying trend that I see. And what is coming along with that is a clear focus on collection of cash taxes. So that's not surprising in an era where governments are in need of some additional cash to fund the budget because of all of the support measures. But I'm sure that Evie can give us a few examples on what those investigations and disputes are about.
Yeah, Bram. Peter already referred to it in the intro. We see an increase in withholding tax challenges because obviously they, in most cases, result in an actual tax cash out for the company, regardless of the financial situation. So not only cases on withholding tax on passive income flows linked to the Danish beneficial ownership cases, but we also see an increase in wage withholding tax challenges, for example, in Belgium, linked to employees in the R&D environment. So there's a clear focus on anything to do with withholding tax. We also see that it goes further than the beneficial ownership challenges to date. Lack of compliance with formalities to ensure the withholding tax exemption is something that's often challenged by the tax authorities as well. And as you refer to, if that is not the route the authorities take, it's based on general anti-avoidance that the tax authorities try to challenge the withholding tax exemption on certain flows. So why? Obviously, because this has an immediate cash tax effect that has an income for the tax authorities. We see that the amounts at stake currently in the cases we are facing are significant. and that the tax authorities are trying different angles to make their case. So it's quite clear that this is a topic they are not dropping, and that these cases will be taken to court. So it will depend on how strong your case is to see what happens in the end.
Thanks, Bram and Evie. And lots of new topics I see and developments in audit landscape. I think anyone in the audience who is day to day involved in taxation will recognize that, of course. But Veronique, I'm interested to learn from you. Do you see similar trends, developments in your area as a tax lawyer?
Yes, I do, Peter. And to begin on what Avi just mentioned regarding cash effects, we see more effective application of tax increases and of the refusal to waive increases in case of settlements. And this has also a very clear reason, because as of assessment year 2019, you are no longer entitled to offset any tax assets or carried forward losses against adjustments for which increases are imposed, which result indeed in effective cash out. However, this new rule is, from my perspective, very disputable on the basis of the principle of legality and foreseeability. So we expect increased disputes in this respect. And as already mentioned by the other speakers, we also see a widespread of general and specific anti-abuse rules instead of the standard provisions. So this can be really hard and complex during an audit, as the tax authorities try to shift the burden of proof towards the taxpayer, who feels then obliged to justify and defend the economic rationale of his whole tax structure, far beyond what is really required by law. So this is an aspect to keep in mind. And what I also particularly observe is a tendency for more and more international cooperation. So not only exchange of information, but also coordinated multilateral audits, which has repercussions as well on statute of limitations and on investigation periods. So for instance, in view of assessing a transfer pricing model applied by a multinational group, the tax authorities of multiple jurisdictions are teaming up to conduct an audit simultaneously. And the conclusions of such audit are then used by the tax inspectors to build their claims on a domestic level, whether or not they have been actively participating in the multilateral audit or not. So we see in practice that this often leads to double or multiple taxations. And as a last point, I would like to remark that the COVID pandemic has really boosted remote audits or e-audits with their particular challenges, like, for instance, extensive data requests. And in that respect, we often assist clients to protect the security and authenticity of their data, and we help them to keep control over the provided data. But I suggest we spend some more time on this topic during a next podcast, Peter.
Yeah, excellent idea, Veronique. That's a great topic for our next podcast. Linking into what you said on the COVID pandemic, one particular topic that I see coming back when speaking with different kind of businesses is the permanent establishment discussion, and with the PE threshold changing with the recent OECD MLI developments. I'm wondering, do we also expect a change from a permanent establishment perspective, specifically in tax audits? Perhaps, Bram, can you shed your light on this?
Absolutely, Peter. And we're not expecting it. It's happening already at this very moment. So tax authorities around the world, and Europe in particular, are becoming very sophisticated in assessing permanent establishments, so creating additional taxable bases in a certain country where specific sales or other valuable activities are taking place. And HMRC in the UK is a good example for that, because they typically cross-reference various data points, travel expenses, salary information on employees, LinkedIn profiles describing responsibilities. And what you often find out there is that there can be a mismatch between what is reported for corporate income tax and transfer price as being a routine or low risk activity. And in a lot of cases, that is simply not matching with some of the high profile individuals that are employed by those entities. So HMRC is really looking actively into that. I also observed it in Italy and France. In Belgium, we see similar cross checks based on VAT and social security registrations, and really active questionnaires being sent out to foreign entities asking details on the activities in Belgium. And I think the pandemic will be a future catalyst for that as well, because we see groups really securing talent where they can find it. And I'm sure, Avi, you have quite some experience already in looking on how you can address that.
Yeah, Bram, as you said, it's already a hot topic today. We see almost on a weekly basis questions coming in from the authorities on why filings weren't made or whether the correct remuneration was allocated to a Belgian presence. It's indeed the lowering of the threshold for the PE recognition that stems from the BEPS project, together with the current reality. So work from anywhere, work from home for many of us. And although there are temporary exceptions to the PE qualification in many OECD countries, if it's clear that they're only linked to working from home as a result of COVID restrictions, many territories have also made it quite clear that if it can be proven that, or if it's the case that this situation was already partly taking place before COVID or will continue post-COVID, that they will apply these lower thresholds for PE recognition without any exception. So indeed, where companies are looking into hiring talent more and more in the place where they can find them instead of maybe where they are located or headquartered, we will see a significant increase of potential permanent establishment challenges. And I think what is the most important message from my side, Bram, in that perspective, make sure that as the finance and tax team, you connect sufficiently with your HR team. We see that a lot of companies are making announcements or writing new policies for their employees, and you want to be involved from the start, because regardless of what your business model will look like, this will have an impact. And if you're not there from the start to ensure that the hiring policy is either in line with your business model, or you adjust your business model and recognize the necessary PEs or do the necessary filings, you will be facing the tax authorities in a couple of years. So again, my message there, stay close to what is happening today, to the policies that are being set out post-COVID, and make sure that they're either aligned with your business model or that you align your business model to this new reality.
Okay, thanks, Evie, and also Bram. Yeah, it's clear, eh? A lot of new topics are on the table, and you already gave some very useful insights, Evie, on what you can do regarding the permanent establishment situation. I'm sure the listeners are wondering, just like me, is there anything more we can do proactively to prepare for these developments? And Bram, do you have any views on that? Something we can do to prepare for this?
There's a lot of stuff you can do, and it all starts off with staying on top of things that are changing or happening. There is an avalanche of new legislation, new interpretation over the last years, and basically in-house tax teams need to stay on top of things. And that's why we also developed a mobile solution, which you can access for free. It gives you insights in frequently audited topics, new developments in over 75 countries. So that's a useful resource to do a first mapping of items which may be of relevance to a business. Of course, nobody likes tax uncertainty, and nobody likes to be taxed twice on the same amount of profit. So there is an increase in seeking upfront certainty with tax authorities. unilateral rulings, but definitely also bilateral when it comes to transfer pricing or even multilateral. And what is clearly an important element to consider is designing and reviewing basically the tax processes and coming up with a tax control framework for your business to make sure that you are mapping and controlling the risks and eventually ensuring tax compliance. So that's really important from a governance perspective so that you're able to disclose and explain to all relevant stakeholders, not only tax authorities, that you're in control over your tax affairs. And it definitely also helps in various discussions or even in disputes to show that as a taxpayer or as a tax manager, you really acted in good faith and that you can demonstrate all the efforts that you have undertaken to ensure tax compliance. And last part I would like to emphasize when it comes to preventing disputes is really upfront analysis and real-time documentation on transactions and models, because really, as we all know, the bar has significantly raised on that front.
Yeah, but I already referred to it. We have some new case law from the European Court. There's a lot of different views on abuse and how it should be interpreted out there. And I think everybody's getting to grips with what this means for their current structure. And what we're doing actually, on a daily basis almost, is looking at the structure that a group has to date and seeing whether they are still in line with the current tax legislation, which has changed quite significantly and rapidly over the past couple of years, and also whether they're ready for the changes to come. We know that there are quite some legislative changes in the pipeline as well. And what we do then is a sustainability check or a stress test of their entire model, making sure that they comply with the different legislations, but also the different points of view and guidance from the different tax authorities in the jurisdictions they are operating in. We do see that this active documentation upfront is proven helpful when clients are faced with an audit. But even if they're not faced with an audit, I think it gives you certain ease knowing that you are compliant with the rules out there and that you're up to date with everything that changed over the past couple of years. Because in many cases it's small change here and there because due to changes in legislation, but it's important to take a step back and make sure that your overall structure is compliant. What we're focusing on is definitely treaty related items like the principal purpose test that came into play. Can I still apply treaty benefits and supporting documentation for that? And then another one where we see more and more appetite due to the uncertain position as a result of the many tax audits ongoing is that clients want upfront certainty and go for an advance ruling or APA or even bilateral or multilateral APA. So we can also cover items like withholding tax, beneficial ownership, and the application of anti-abuse provisions. In those rulings, we have already secured some, so that's definitely a route some companies are taking, and then you can even take it a step further and look into a more sustainable relationship with the tax authorities. But I think that's something you will discuss further with Bram, Peter.
Yeah, thanks, Evie. Yeah, prevention is the best cure. That's for sure. And if you can avoid having to spend time on an audit, that is time you win to do something else, of course. But sometimes audits happen, and Veronique, perhaps you can share a bit of your insights on when an audit happens, how you can manage the audit in a constructive manner and in the right context. Anything you can share here with the audience?
Yeah, well, with what has already been explained here, it must already be clear to the audience that preparation of an audit is key. And this implies that being aware of the fact that cross checks will be made of the tax documentation by the tax authorities with information that is gathered from different sources, like, for instance, VAT information, country by country reporting, and information gathered from abroad. Secondly, screening upfront on what is out there in the open on your company is important, not only public available data, but also what is on social media or what is in the press. This gives you a view on what could be the perception of the tax authorities about your company, which could be different than what is presented in your official documentation. Being aware of that perception allows you to explain some things better in the right context during the audit. It is also important during an audit to stick to your story and to your documentation and tax technical reasons that are on the basis of your business model and of your transactions. And don't dwell too much on side discussions or on irrelevant remarks of the tax inspectors. Don't forget, first of all, it is up to the tax authorities to prove that your tax position is wrong, and that they first need to explain why they believe that your position would not be correct. And to conclude, I would advise the audience to be aware of the investigation powers of the tax authorities, as they are often pushing the boundaries. In that respect, we organize workshops for clients to prepare them for such kind of audits and to develop policies to manage audits. So that was it for my side, Peter.
Yeah. Thank you, Veronique, and useful insights here indeed when an audit happens on how to manage that in the right manner. Speaking with businesses, I often hear, also in other countries in Belgium, the word cooperative compliance. And I'm just wondering if cooperative compliance could be a game changer here and really bringing more legal certainty to companies. And Bram, you're closely monitoring that. What's your view on this?
Well, I'm a firm believer that cooperative compliance is the future, both for taxpayers and for governments, because it's really an approach where you step away from a reactive conflict model to a proactive and transparent dialogue between taxpayer and tax authorities. And basically, groups already do a lot. They are transparent, they document their positions. So why not share that in an open environment with the tax authorities? And ask for approval on that, because that basically allows that you can prioritize both tax authorities and taxpayers on those items that really matter and those items that pose a greater risk. So there's no point in spending a lot of resources when items can be classified as low risk from a tax perspective. So we definitely have good examples, Peter, from other countries. There is a pilot in Belgium. But I think time is a bit short to go into all of the details now, so let's maybe put that on the agenda for a different time.
Yeah, indeed. I think that brings us to the end of the time we have for this topic and this podcast. I found it a very interesting discussion with all of you and the new developments in the area of controversy. If listeners want to know more about this topic, I would invite you to read more about it on our website or connect with one of the speakers. You can find their contact details on the podcast website, so feel free to do that if you have particular questions. If you like our podcast, I invite you to register for it, so you automatically will receive the new episodes, and you can do that on Apple, Spotify, Google, or the PwC website. And with that, I want to thank the speakers and hope to have you next time in our podcast.